Hello and welcome to CMC Markets Trading Outlook for the week of April the 13th, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic for this week is get ready for midweek mania. We're looking at a very busy week for data, but most of it is concentrated into 2 or 3 days between Tuesday and Thursday primarily, with a few other things coming out on Friday. But we do have a lot of news coming out this week and a lot of potential action in the markets. We're coming off of a very strong week for world stock markets. We've seen major advances in Hong Kong, in Japan, in Germany, across Europe, UK. A number of markets have rallied to new all-time highs, have blasted through big round numbers. It's been a really strong week for stocks, and so now we're going to see, are we going to get some serious follow through, and more importantly, what's going to happen with the U.S. market? While Asia Pacific and European markets have been really strong, the U.S. has been lagging behind. It still seems stuck in its trading channels, and the gap in performance is starting to widen. The U.S. was the leader for the last several years, pulling the world markets along with it. Now it's leveled off and it's handed the torch over to other markets. Will they be able to continue, or at some point will we see a reversal and some sort of move back towards the middle for both of them? We'll see what happens over the coming week. We're also looking at potentially a big week for action in currency markets as well as commodities. So we'll speak to all of these. I'll just start off by talking about some of the main events we can expect through the week. One of the big themes this week is going to be inflation reports. We get inflation reports from the United Kingdom, from North America, and from elsewhere. And what people are going to be looking at there is the impact of crude oil on inflation. Our headline inflation number is going to drop below zero. Our core inflation number is going to continue to hold up, the ones that exclude the energy markets. Is the effect of oil as temporary as some people have been saying, or could it have a more lasting impact? The reason people are looking at this is, what does it mean for monetary policy? In the United States, people have been thinking that perhaps the decline in inflation, or recent declines in the economy, may be related more to the oil effect or to seasonal effects, and that these may transition out and the economic growth resume as the year progresses. If so, we could see the Fed still continue to move towards raising interest rates, while other central banks have been heading in the other direction. In terms of central banks meetings this week, we have two midweek. One is the ECB, where people will be looking for an update on their quantitative easing program. The other one is the Bank of Canada. The Canadian employment figures that just came out were stronger than expected, even though they were driven by part-time jobs. The point was that they weren't falling off a cliff either. Even the full-time decline was essentially a bit of a retrenchment after a big increase the month before. So it doesn't look as though Canada's economy is falling off a cliff, which means they're unlikely to to cut interest rates at this meeting, although some people have been speculating that. To me, I don't think a cut will happen, but we'll see. Moving on, there's also a lot of other data coming out this week of note. It's a little quieter for the United States, but the other big main event we have in terms of data is on Wednesday morning local time, Tuesday evening in North America. We get the big data reports out of China, in particular GDP, retail sales, industrial production. That GDP report could be key. People have been wondering, is China's economy how fast is China's economy slowing? Is it going to slow below that 7.0% target, which had already been cut from 7.5%, and how slow is it in light of all the aggressive easing moves we've seen from the People's Bank of China during the quarter? Have they been signaling to us that we're going to see some real weakness in the Chinese economy? This number could give us a good indication, and it could be particularly significant in light of all the big moves we've had recently in Asia Pacific indices, particularly in China, both in Shanghai and in Hong Kong, as well as markets that are sensitive to China and the Chinese economy, such as Australia and New Zealand. So that could be a really big data point and spark a lot of market action that could dominate the week. Some other things of note we also have the UK employment coming out on Friday. Plus we have retail sales reports from North America. The US is on Wednesday, Canada's on Friday. So there is a lot of news coming out. Overlaid on top of this And perhaps one of the reasons why we are seeing the U.S. markets level off and not following their counterparts higher is it's also the first week of earnings reporting in the United States. We're coming off a week where things were a little bit mixed. We had a positive report out of Alcoa, but we had a profit warning out of Citrix Systems. And one of the things we'd seen last quarter was a number of big tech companies were starting to warn a little bit on the impact of a higher dollar on their earnings, a higher U.S. dollar, in terms of slowing export business, and as well the business from their overseas, the profits from their overseas business getting translated back to U.S. dollars at a lower rate. So because of that, they are starting to warn on weakness, and we're going to see in the next few weeks, is this so far contained to technology, or is this going to be something that's more broad-based among U.S. multinationals? This week, we have the focus is primarily on financials. On Tuesday, we have J.P. Morgan and Wells Fargo. On Wednesday, we have Bank of America. On Thursday is Goldman Sachs and Citigroup. Some of the other big names reporting this week: on Tuesday night, after U.S. markets close, we have Intel, and on Wednesday, we have Netflix and SanDisk. On Friday morning, we wrap up with General Electric. So it is a big week for earnings, concentrated in financials and technology, particularly the technology might be in focus on the U.S. dollar impact on their businesses. I'm now going to talk about some more specific markets and their charts and their trading outlook for the coming week. So I thought we'd start here on the currency side with cable. We have a big breakdown for sterling against the U.S. dollar today. It had been trading in the 146, 147 to about 150 range. It's now broken down from that. This is a combination of a couple things. This broader trend is of weakening in sterling has been similar to the euro and the CAD and the Aussie and a lot of other markets based on U.S. dollar strength. However, the breakdown also in the U.K. we could be seeing as a function of the uncertainty over the upcoming election. Polls had been mixed, and in the past people thought the Conservatives been leading. Now it looks as though Labour might be leading. And the question, do we get a hung parliament, and could we get a change of government if Labour is able to win enough seats and cobble together a coalition? With uncertainty starting to grow around the UK election, we're starting to see that play out, particularly in the currency markets right now. The FTSE has actually been following its continental counterparts higher. So where we're really seeing the election uncertainty play out right now is in sterling. So keep an eye on cable as well as other sterling pairs. And just to note here, RSI momentum also rolling down. What's interesting here, if we look at the client sentiment, we're seeing that in fact we're seeing clients had been nibbling down here at this lower level, thinking there had been a base. We're seeing buy positions getting cut back significantly. This could be a function of stop losses getting hit, or people deciding to back away on the breakdown, and some people perhaps even starting to think about going short. So we are seeing a reduction in the long position in sterling on this, and we'll compare that with the euro today, where we're seeing the euro clients still remain substantially short. So we had a big divergence where people were long sterling and short the euro, and now we're starting to see that come back into the revert a little bit back towards the middle. So what we're seeing here is still pretty strong, particularly among top clients, 93% short positions against the euro. So people are still pretty bearish on the euro as the ECB continues to roll out its quantitative easing program. And what are we seeing here? We had a down leg in early March. We'd had a bounce and some consolidation through late March, early April. We had a double top here, failure at about 110, where this Fibonacci level and a round number converge, and now we've got a double top there. And at the same time, we saw a failure on the RSI to get back above 50. So overall, this told us that this has basically been a pause within an ongoing downtrend. We're seeing it start to roll down again. We've broken this trend support line here. That was around 107.80, taking out this Fibonacci around 107.15, continuing to decline. At this point, it does look as though, especially with the downward momentum growing, that we could see a retest of the 105 to 104.60 range in the incoming sessions. Flipping now, I'm going to stick with Europe for now, but I did want to highlight some of the action in indices, and we'll start with the DAX today, which has been extremely strong, and as we can see is breaking out to another new all-time high. Look at this, huge advance consolidation, huge advance consolidation. Excellent. This is what I call a staircase pattern: rally, higher level, rally, pause, breakout. Looks like the kickoff of another rally phase here. This was 11,800. This was 12,200. Channel measures you up towards 12,600, or even on the way to that, the 12,500 round number. RSI could be starting to get a little overbought again, so maybe you might get a retest of the 12.2 breakout point, but at the same time it is also showing an acceleration. So overall we are continuing to see strength in the DAX. We're also seeing strength today spilling over into the FTSE, which I will show here as well. Oh, one thing I wanted to show on the DAX before I move on, my apologies here, was this. We are seeing, though, as I talked about it getting overbought, we're also seeing a bit of a split in sentiment here. While we've got the DAX going to a new high, we're about 50-50 on long-short between number of clients. And look at this today. The short position has increased by 14% among top clients against the DAX. So some traders aren't totally convinced about this rally. Perhaps that you may get a retest. Some people have been taking profits or actually starting to short into this rally here. Now I'll move on to the FTSE, which we've also seen break out to a new high today. Finally, it's been struggling, and it cleared the 6,900, briefly cleared the 7,000. We've seen it in quite a volatile range here between 6,700 and what's now 7,100. Has broken out to a new high, and does look as though it wants to kind of continue to trend its way higher here. We'll see how that goes. But interestingly enough, on this one, the clients are still fairly short in terms of position value, but at the same time, the number of clients are a little less. But overall, still, clients have not been totally convinced about this rally. Does this mean that people now that are shorter at some point are going to have to cover those positions off, which could provide a source of buying? Is a possibility. So keep an eye on this. If it keeps heading higher, you could get into see the shorts starting to get squeezed here. And now, in comparison with these markets, I'll show the United States and what's been going on there. We've got the basically, while Europe and Asia Pacific, I'll show in a bit, heading higher, the U.S. has pretty much leveled off here. Had been a huge advance over several years, QE driven. That's now dried up, and they're starting to talk about raising interest rates, and the U.S. is leveling off. This is normal, by the way, for a midpoint in a cycle when the Fed starts talking about raising rates. You find that the upside gets capped because the liquidity is going away, but there's downside support because the reason the liquidity is going away is because you have the support of the stronger economy. What do you end up with? This is a sideways pattern. We've seen these in the past. These things can go on 6, 9 months, a year. So we could see the U.S. markets remain range-bound for some time. We are seeing the Dow peaking back up above 18. Big resistance is here about 18,300. First support is around here around 17,600. The 200-day moving average and the Fibonacci test around 17,380. The S&P I'll just show very quickly just to confirm that that is actually leveling off and going sideways as well. And look at this, we're mixed again in terms of clients, where we have a bullish on the number of clients but bearish on position value. And what this is telling us is that the bears here appear to have more conviction and appear to have taken on larger positions on the bearish side. So that's something to be keeping an eye on there. I'll move now from the U.S. market. I wanted to switch to Canada for a moment and talk about the loonie ahead of the Bank of Canada decision and after the employment report. So let's bring up dollar CAD here. And we'll see that with the oil price crash, the loonie had weakened, so dollar CAD took off. With oil price leveling off, dollar CAD is leveled off. This is a 124 to a 128 trading range, and we're currently sitting right in the middle, about 125.90 or 126 even. So we're right in the middle of this trading channel. The RSI here is telling us that upward momentum is continuing to slow, And so we could be in this trading range for some time. Keep an eye on the oil price. If the oil price breaks out, this could break down. If the oil price breaks down, this could break out. But on the interim, it does look as though, as I said, that we can see some action again, perhaps within this channel around the Bank of Canada decision on Wednesday. But overall, I'm not expecting them to make any changes at this time. The next market, I want to move now to Asia Pacific markets and highlight some of the action there, where we've seen quite a bit of trading, particularly on the index side. I'm just going to quickly though show Aussie dollar. As we've seen Canada level off, we've also seen Australia and New Zealand bottom out here. This was more on the decline in metal prices, iron ore and copper, and the rally in the U.S. dollar. But over the last couple of months, the Aussie dollar and the Kiwi dollar have both started to go sideways. We've got a double bottom here in the Aussie dollar, and it's hanging around in this 75.50, maybe even down to 75, up to about 75 range, with a midpoint around 77-ish, 77 and a quarter. But look at this. We had a positive divergence in the RSI. RSI is slowly creeping its way higher. Tells us that we are seeing a shift in momentum from downward to at least sideways, not quite upward yet. You'd need to clear this 79 to signal an uptrend for Aussie dollar. And if we just show Kiwi dollar as well, we'll see the same sort of thing here. We are trying to form a bit of a, as this is 77 at the top, and a nice trend here. We are forming a bit of an ascending triangle base. Once again, we have this RSI kind of showing that momentum has shifted from downward to at least sideways, if not starting to work its way up. This big resistance here, Fibonacci, is 78 to, let's call it 78.50. But where we could see quite a bit of action this week, not just in the currencies, but in the indices for Asia Pacific markets this week, and we'll start with the Hang Seng, which could be particularly active on the Chinese inflation reports. This was huge. It got to the point last week where once we broke out of this channel of what I could actually do technically, because we've had such a massive rally, explosive breakout. We blasted through 25,000, and this was 25,400, and then it just exploded to the upside. Look at some of these big gaps, and day after day, where the high of one day was the low of the next day, and now we're seeing a bit of tiring out here. So it's possible we may what I call a pause. I mean, this thing could still swing around in the 1,000-point range over the course of a week with the action it's had, having put on almost 2,500, almost 3,000 points in a couple of days. I mean, wow, what a huge move! And it's gone from oversold to substantially overbought. Another reason why on anything we could see a lot of volatility. We could see people that are long deciding to take profits. We could see people deciding to try and short this, short the rally. So we could see some substantial swings in and around the China data as it comes out over the course of this week. The main event is GDP, but of course the trade numbers earlier in the week could also spark some trading activity as well. And the Hang Seng is not the only market that had hit new highs lately. We also have the Japan, which I'll bring up now. And sorry, I am just adding it to my green group so that it'll come up again along with everything else. So the Hong Kong, and now I'm going to show the Japanese market. I still think this is an incredible feature. It's made my work so much easier with the module linking, where I've put my charts and my client sentiment into a group, which is my green group, and once I click, then everything changes. So let's just take a look here at the Japan 225, running up, taking and bumping up here against this 20,000 round number. It's had a spectacular run here from 16,500 only 3 months ago. Like, what a huge move in 3 months to put on 3,500 points and get up to the big 20,000 barrier. But look at this. We are seeing the potential for a head and shoulders top here, and a bit of a negative divergence in the RSI that's telling us that this upward momentum might be starting to get slow. This this rally might be getting tired, and perhaps in and around 19-20,000, we may need to level off a little bit and digest some of these huge gains. We do have the support of the Bank of Japan's own quantitative easing program, although we also saw at the last meeting that there's starting to be some dissent about it. There was actually one member calling for a tapering of the program, pulling back on the purchases. We'll see in the coming months if those get any louder or not, but it's something to certainly something to keep an eye on here. And we'll look at the Australia market as well, where we can see is a little bit more intriguing here because it's had a big run up to this 6,000 round number, and it's kind of leveled off here. We've had we're seeing a bit of a negative trend forming in the RSI, but 50 is still holding. So we've got kind of a negative and positive forces working on this, and hence we've seen the index starting to go sideways between about 5780, 5800, and 6000. But we've got to ask ourselves here: is this an ascending triangle, or is this a triple top? Right? We've got three highs here, but at the same time, if we come down here and we pull this up, we're also forming an ascending triangle. So we're really getting a lot of mixed signals here on the Australian market that could keep things active. So it does look as though we are heading into an active week. There's a lot of going on. There's a lot of economic news. There's a lot of corporate news, and so we could see quite a bit of action play out across world markets.